Alright, good evening, everybody, and welcome to today's lecture. If you are here with me, please kindly drop a comment. Kindly drop a comment in the comment section so that I know I'm not alone here. Good evening. 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 We are not enough in this class. If you are here with me, kindly acknowledge that fact. Drop a text. Let's greet each other. Drop an emoji. Just drop something that makes me know that you are there. All right, let's begin. Now we'll be continuing our topic on cash book and petty cash book. Yeah, that was the topic that we started in the last class. All right, we talked about cash book, and petty cash book, and then we stopped at types of cash book. Now I'm trying to go over. I'm just going to try to go over it very briefly once again, and then from there, I'll take it back to where we stopped in our last class and then we'll move from there. Is that taken? All right, now let me tell you something. Last class, I said the major reason we have our cash book is for what? To record your major aim of your cash book is to record the movement of cash. Is that taken? It records the movement of cash. All right, that's the major reason you have your cash book. So you have your cash book is telling you whenever money comes in, it tells you. Whenever money goes out, it does what? It tells you. All right. So that's the major reason you have your cash book. Now, and what else? I said you should pay attention to the fact that your cash book is both a subsidiary book and what? And a ledger. All right. The cash book is both a subsidiary book and a ledger. All right. So I'm telling you that I told you guys that these are the type of questions that they might ask you. All right. Nobody, you want to write jam. All right. Nobody is asking you to prepare cash book from from the beginning, all right? But they want to see that you can actually do some things, that you understand everything about a cash book. And that's why when they want to ask you questions, these are the kind of questions that they will ask you. For example, what is the purpose of the cash book? We know that it's to track and record what? The movement of cash. Another thing is what? They can list out something and they will be like, all right, which of this is not a subsidiary book? Now, if you see a question like that, please take note. If cash book is in the option, it cannot be the answer. If they also ask you this kind of question, which of this is not a ledger? If cash book is in the options, that is not the answer. And why is that? It is because your cash book functions as it has a dual function, all right? It functions as a subsidiary book. Don't forget what subsidiary book is. That book of accounts where we record our transactions first before they are being transferred, before they are transferred to the ledgers, all right? So the cash book is both a subsidiary book and then it also serves as a what? As a ledger for transactions. So just like the way your sales account serves as the ledger for cash transaction, but your sales day book serves as a subsidiary book, sorry, for credit sales transaction, and your sales day book um, serves as the book, the subsidiary book for credit sales. That's the same way cash serves as both subsidiary book and ledger for what? For pay cash transactions. And don't forget, when we are talking about cash transactions, we are talking about transactions where payment is made, not necessarily where payment is made. It might not necessarily mean that these people actually what? Actually paid by physical cash, or right? It might be through bank. But so far payment is made, whether you receive payment or you made payment to an outside party, that's what? It has to pass through the cash book. It's a cash transaction. Is that fine? It's a cash transaction, right? Then we moved on. We talked about the types of cash book. We said we have the single column cash book, all right? We also have the double column cash book. We have the triple column. Kumi, you're welcome. You're welcome. Yeah, I'm just starting on cash book and I'm giving a quick revision of what we discussed in our previous lecture. If you have any question, kindly drop it in the comment section and I'll definitely attend to it as I go on. Is that fine? All right, all right. So we have the single column cash book, we have the double column cash book, the three column cash book, and finally the petty cash book. Now I told you that the major difference between all the single column cash book and all of that is the number of column where amount is what is imputed. It means that for your single column cash book, thank you, Kumi. It means that for your single column cash book, amount has just one column. Is that taken? This is an example of the single column cash book. You have the debit side, you have the credit side, then you have your amount received, you also have your amount. You will see that there is only one column for what? There's only one column for cash, for payment. All right. And in this case, because there's just one column, your single column cash book only deals with physical, it deals with the movement of physical cash alone. Is that fine? It does not talk about payment in bank and all of that. That's why it's majorly used by what? By just individuals and maybe very little businesses that deal entirely in what? In physical cash. All right. Now that takes us to move back to what? Of course, we solved an example on it in our previous lecture. Then we now entered what we know as what? Our double column cash book. All right. We said this cash book is called double column cash book because there are two columns for what? For amount. All right. Now, instead of you having, you don't really understand folio. Of course, I'm going to demystify it here. I'm going to explain it again to you. Thank you for bringing that to my attention. Once I explain it, I'm going to ask you whether you understand or not, and I would want you to give me a response. You remember that we talked about it in our previous lecture, right? All right. I'm going to explain it better now. So we have double column cash book. Now you would see that for this double column cash book, we have two columns for what? For amount, both on the debit side and on the credit side. Is that fine? So compared to your single column cash book where you had just one column for when you have just one column for amount, now you have what? You have two columns for anything amount. Now this one, because of the two column it has a column for what? For cash and for bank, which means that any payment or any transaction that is made with what? With physical cash comes under this place. For example, if I give you physical cash, it comes here. But if I issue out any transaction that passes through the bank, any transaction that happens and passes through the bank comes under what? The bank column. For example, if I give you a check, it comes here. Is that fine? Alright, now that takes us back to folio. Now in the actual sense, you know that if you pay attention, you notice that you hardly use folio. That's in theory. In practice, folio is used as a reference column. Do you understand that? Folio is used as a reference. Now, what do I mean by that? It means that now what does that mean? It basically means that now when a transaction happens, all right, you have to reference it back to where that transaction is going to. Now, for example, you remember that if you are doing your sales day book, you are going to have something like this. Look at it. Oh. You have sorry. I'm sorry. Please kindly give me a minute. All right. So you have your sales day book. You have something like this. Sales day book. So let's say you have, I think your particulars or description here. Then you have amount. So you see something like sold 100 bags of cement at 1,000 naira each, and the amount will be what? 100. So let's say there's trade discount at 10%. 10% of 100,000 gives you 10,000. All right. You deduct that, you have 90,000 as your balance. So you say this balance will transferred to the sales ledger. Is that taken? Do you remember that? Do you remember that? You don't remember sales day book? Ah, it is sales day book now. And let's see how it goes. Maybe we'll finally have to go over it again. All right. So now what I'm saying is that there is a reference saying that it is being transferred to the sales account of sales ledger. All right. Now for cash book, normally in practice we used to have something like under folio you put a reference there as explain where a particular transaction is going to. Do you understand that? I mean the name of the ledger. So generally we used to have something called general ledger because that's where you will see your nominal account basically. So if you let's say let's 21 2018 rent. Rent is a nominal account. It's going to the general ledger, alright, 7,000. It means that when I'm looking for rent, I have to go and what? Open the general ledger. Do you understand that? So that's the way folio works. Now folio now works. So that's but we don't use this in we don't use it normally because of course I know that it's going to rent account because of this description. Do you understand that? But the reason we use this for contra entry is because we are trying to tell you that the double entry of this account is still in the same what? Cash book. That's why it is written as C to show you that it is a contra entry inside the cash book. Do you understand that? So he's saying that instead of the other arm of this transaction to be in the general ledger, it is still where? In the cash book. Instead of it to be a general ledger, to be inside general ledger here, is going to see is what? Cash book. Is that taken? Let me know if you understand that. Let me know if you understand that before I continue. All right, thank you. So that's what folio does, all right? It just helps you know that these are particular accounts. That means you have to know other accounts well. I don't think I quite understand your question. Can you reframe it? But normally, you are supposed to understand other accounts too. But you don't need the knowledge of other accounts to be able to prepare cash book now. You don't need it. But you are supposed to know other accounts well, of course. If you are aiming to become an accountant, you are supposed to know all accounts. And for JAMB too, your JAMB syllabus covers most accounts. So you are supposed to know it. Of course, they will not ask you in theory, but you are supposed to understand the basics. You are supposed to know what is recorded in other books. I'm still actually finding it difficult to understand your question. But let me just take it this way. As the accountant of an organization, you are supposed to actually know what is going on in the books of that organization. Because when you are an accountant, you are not just preparing cash book, you are probably overseeing everything. Do you get? So you are supposed to know where this one is going. And don't forget, everything is double entry. As we are crediting the cash book for rent here, you also have to go and do what? Yes, yes, yes. You have to know where the account is going. For example, I know that this is rent and the other corresponding debit entry is going to the rent account. And in real life, the rent account will be where? Will be in the general ledger. Is that taken? It will be in the general ledger. It's a nominal account. So that's why I can put GL here. But that one is not really thought about. Is that taken? We only put it. That's why we majorly just leave others because those ones can easily be figured out. But you see that contra entry, you have to pay attention to it very well. That's why you just put C just to state that this particular account is what is this particular transaction is a contra entry. And don't forget what a contra entry means. It means a transaction that has the double entry completed in one account. Do you understand that? Let me type it out for you. So can you see it? Contra entry happens when the double entry of a transaction is completed in one single account. That is, you debit that same account and you also credit it. That's what contra entry means. Do you understand that? So in cash book, these are the two ways that contra entry occurs. All right. The only thing that will make you credit and debit the cash book at the same time is if money moves from cash to bank or from bank to cash. Do you understand that? Yes. All right. So if money moves from cash to bank, how will money move from cash to bank? That is when you deposit cash. How will cash move from bank to cash? That is when you do what? You withdraw. Come here, let me rub this off so that you know. So when you deposit cash, money will move from cash to bank. But you can also withdraw cash for business use. When you withdraw cash from bank, that's when your contra entry can happen. So you notice that money is moving from one side of the account to the other account. So you have to debit and credit that same account. So the double entry of that particular transaction is going to be completed in that one account. Is that taken? Now the next, so that's contra entry for you. Now I also explained bank overdraft. Sorry about this. Let me. So I also explained bank overdraft, and I told you that normally for cash, you cannot spend more than what you have in physical cash. For example, if you have 5,000 naira cash on your hand, you cannot spend more than that 5,000 naira cash. Is that taken? All right, except you borrow money. But for bank, you can spend more than what you have in the bank. So if you have 50,000 naira in the bank, you can come to an arrangement with the bank that they will allow you to spend 70,000 naira directly from your bank. That's an overdraft of 20,000 naira. Is that taken? So that's actually the way it works. Instead of 50,000, they can allow you to spend more than that, and that's what it means by overdraft. Now, because you are spending 20,000 naira, this extra 20,000 naira is a current liability for you. Let me say is an owing, and an owing is what? Current liability. All right, so owing is current liability. That's it. Next one, we also talked about dishonored checks, all right? And we said these are checks lodged into a bank but were rejected. So you can call dishonored checks what? Rejected checks, just as I wrote it here. Is that fine? All right. And I said it might be due to, so what it means by rejected check is somebody gave you a check to cash out, and when you go to the bank, they told you that they cannot give you the money, all right, due to one reason or the other. Now, those reasons might be alterations on the face of the check, it might be insufficient funds, it might be irregular signature. That is when the signature on the check does not tally with the one that is registered with the bank. Then we have wrong date or amount or wrong date or difference between amount in words and figures. All right. So when you wrote 80,000, but when you wrote 80,000 in words, but when you wanted to write figure, you went ahead to write 89,000, maybe because of your bad handwriting or something. The check will be dishonored. So with that, now let us move into, then we solved this question too. I remember that. Now with that, let us move into three column cash book. If you have any other question, kindly let me know. Before I go, there is this question. So this are the type of question that they can actually ask you. As a matter of fact, this particular question is part of your past question. It was asked in the previous diet. Sorry, in the previous exam, last year's exam, this particular question was asked. All right. So I'm saying let us look at it together. Let me rub it off and you do it so that you can see how I did it. So now we have in a cash book, this is one of the ways they can ask you a question, right? Said in a cash book, the opening balance was 7,600, closing balance was 9,200, and the total cash received during the period was 18,000. All right. What was the amount of cash paid out during the year? They told you that now if you want to do it in an account format, you do something like this. All right. You would say debit, credit. Let's assume that this is our cash book. Now they said opening balance. Let's put our naira sign. Don't forget. They said opening balance. Your opening balance, don't forget, is your balance brought forward from last period. They said your opening balance was 7,600. Closing balance is your balance carried down. So it has to come here. That would be 9,200. They said the total cash received. Now, when you receive money, where do you put it? Debit side of cash book, abi, because cash is receiving, cash is increasing. So let's come here. Let's say cash received. $18,000. All right. So let's add it. Now, what are we looking for? We're actually looking for the amount of cash paid out during the period. And the amount of cash paid out during the period is supposed to be here. Abi, that's what we are looking for. Is that taken? Now, when you add 7,600 to 18,000, what do you have? You have 25,600. Let's put that here. 25,000. Now, if the total amount I had at the beginning was 7,600 and I received extra 18,000, that means I'm supposed to have total of 25,600. But my balance carried down with my closing balance, it shows the actual amount of money that I have. Abi now. So if this happens, it means that I must have spent this money up to this. So if I have spent 25,600 and it now remains 92, it means that I actually spent 25,600 minus what? 9,200, which means my cash paid during the year or during the period is what? 16,400. Hence the reason for the answer I picked there. Alright. So given that, then the answer would be what? The answer is 16,400 naira. Any questions? Kumi? Any questions before I move on? Any questions? Any questions? Any questions? All right, so you understand perfectly. That's fine. You understand perfectly. All right. So now let's move on. Now the third type of cash book is called what? The three column cash book. And when we are talking about three column cash book, we are saying that this is a type of this is the type of cash book that has what? That has three columns for amount. That's basically what it means. It means that your amount contains what? When you check the account and you check three, you will see account on what? On three column. Is that fine? So this is sorry. So this is sorry. So this is the way your I hope you are still with me. So this is the way your all right, thank you. This is the way your three column cash book is. Now you notice what did you have here? So you notice that you have your date, your description, your folio. Now notice that these three items did not change. All right, it did not change at all. You still have your date, description, and folio as you had it under single column cash book, and double column cash book. I told you that the only thing that is changing is this place. All right, from year to year. From year to year. Now for now, discount has been what? Has been included, and that's what made the column three. So you have amount here, you have amount here, you would also have amount here. The amount here is the amount from physical cash. The amount here is the amount from any amount that pass through bank. Why discount? Now what is discount? Discount is basically the reduction in price of something, right? Now note that there are two types. Good evening, Balikis, you are welcome. Temitope, yeah, you are welcome. Eh, you're welcome. All right. So we have one account for cash, for bank, and for discount allowed. All right. Now, what's discount allowed? Whenever you hear discount, know that we are talking about a reduction in price. All right. So discount means reduction in price, which means if you are supposed to pay an higher price, but somebody is allowing you to pay an amount that is lower than the original price that you were supposed to pay. Is that taken? So that is what is called discount. Now there are two types of discounts that we are going to consider. We have the trade discount and the cash discount. Your trade discount is an allowance that is made by the seller to the buyer in form of deduction from catalog price. Please pay attention to this. These are the kind of questions that they can ask you in your jam. You know that they cannot ask you theory questions, so they cannot be saying prepare a trading profit or loss account, but they can ask you questions like this. They are trying to analyze. They want to check your analytical thinking, how you can understand stuff. All right. So they can ask you this particular type of question: which type of or what allowance or which type of discount is given to a seller in form of deduction from catalog prices? The answer is what? Trade discount and not cash discount. The major difference between it is that for cash discount is conditioned on what? Something called prompt payment. When you are talking about prompt payment, you are saying early payment. All right, we are saying that if we give you a deadline to pay, you must pay within that deadline or before that deadline. Is that taken before we can consider you for cash discount? So if, for example, somebody bought goods of 75,000 for you, you now told the person, if you pay in 30 days, I'm going to give you a 10% discount. Now, if the person pays on the 26th day, or on the first day, on the third day, any day before this 30th day, or that is not beyond this 30th day, it means that instead of him paying 75,000, you pay 75,000 minus 10%. Now, what's 10%? 10% of 75,000 is 7,500. When you remove that, you have what? 67,500, which means the actual amount that this person will pay, that based on 26th day, will be 67,500. But if this person pays on the 31st day, he's paying 75,000, there is what? No, there's no discount for him. Is that taking? That's the major difference between trade discount and cash discount. Another thing is your trade discount is not part of your double entry process. Alright, you don't prepare account for trade discount. Whereas for cash discount, you prepare accounts for it. Alright, although you don't call them cash discount. And why is that? It is because cash discount occur in two forms. Alright, you have your discount allowed and you also have your discount received. Don't take it too hard. It's not hard. Your discount allowed is the discount that you give to somebody, right? As a seller, somebody bought goods from you and then you decided to tell the person to pay less 10%. That's what? That's discount allowed. You are the one giving the allowance, all right? But discount received means when you enjoy the benefit of what? Of discount. Do you understand that? All right, when you enjoy the benefit of discount. So you bought goods from one particular person and then they are telling you that you must pay before a particular date. All right. If you were able to pay before that date, that's what? Discount received. So discount allowed is discount given to a business by a business to its customers for what? For prompt payment. Now notice, this is another kind of question that they can ask you. It is entered on the debit side of the three-column cash book. See our three-column cash book. Look at where discount allowed is. Debit side. Is that fine? This is because as you are receiving money, you want to remove the discount first. That's why they are together. And for this one, your discount received is on the credit side. As you are paying money, you are removing the what? The discount received. Are we still together? Is I need responses. Are we still together? So another thing that you should note is that your discount allowed is treated as expense in the profit or loss account. So you can have this question, and then they will ask you how is your discount allowed treated, alright? You should know that your discount allowed is treated as an expense in the profit or loss account. Is that fine? It is treated as an expense, alright, in the profit or loss account. That's a potential question for you. While discount received on the other hand is treated as what? As income in the profit or loss account. Another way they can structure it is that what side will your discount allowed be? Because it's an expense, it will be on the debit side of your trading profit or loss account because that's where expenses is. Why this one will be on the credit side of P and L? Is that taken? Of Do we understand that? Do we understand that? Because I need our responses. Do we understand before I continue to solving a question? Do you have any question that you want to ask me? Something that I've explained that you did not understand? Kumi, Balikis, I'm waiting on you guys. You have a question. If you have a question, kindly drop it. Oh. Balikis, let me hear from you. Okay, yes, you understand. All right, that's fine. Balikis, you are still here. Let me hear from you. Do you understand? Just drop a comment. All right, let's continue then. Now, the following transactions took place in the book of Adiza for the month of May 2010. All right, and we are told to prepare a three-column cash book. All right, now this is it. This is your three column cash book here, sitting pretty. Now let's look at the dates. Now, first transaction, I have filled the tables, but I didn't complete it because of time, actually. But I stopped it here. So from year to year, we would fill it ourselves and then we'll balance the account. All right. So just because of our time, I filled this table. Now, so the first transaction is May 1st. We have cash in hand and cash at bank. 1542. What does that mean? Opening balance of physical cash and opening balance of what? Cash in the bank. So we have May 1. Of course, you know that's going on the debit side. And why is that? It is because your cash book is a debit balance account. It means that now when you say something is debit balance, it means your debit side is what is greater than your credit side. If it is credit balance, it means that your credit side will be greater than your debit side. All right. So May 1 balance brought forward. You have cash of 15, bank of what? 4,200. Is that fine? Yes. All right. May 4, you purchase goods by check. May 6, cash sales 900. Purchase goods by check 600. What do we do? Purchases. That's a credit balance because cash is giving money to purchases. So come here, May 4, purchases on the credit side. And since they did it by check, it should be under what? Under bank. That's 600 naira. Then we said on May 6, there was sales, cash sales of 900 naira. All right. Sales comes to the debit side of your cash book. You say May 6, description is sales. And how much is it? 900. And that 900 has to be under cash. Why? Because the sales were what? Were made in for cash. That's cash sales. Now, May 7, we have purchased goods by cash, 500 naira. So let's go. May 7, purchases goods by cash, 500 naira. All right. So that's that. Now, the next one is a contra entry. We say we cash banked. We banked cash of 700 naira. What does that mean? It basically means that we took money. Another way they can write it for you. Another way they can write it for you is that you took money out of the cash till and you deposited it in the bank. Is that taken? So that's basically what it means. And when we see that money is moving from cash to bank or money is moving from bank to cash, then we know that we have what? We know that we have ourselves in what? A contra entry transaction. Is that fine? So how do we treat this? It has to be entered on both the debit side and credit side of the cash book for 700 naira. Cash bank means money is moving from cash and is entering bank. So we have to credit cash and we debit bank. So you see May 8, bank 700 naira under cash. And why is that? It is because the money is moving out of cash. This bank here, particulars, just described where the money is going to. We know that the money is going to the bank column. Then, of course, don't forget our folio. All right, we put C to indicate that that particular transaction is a contra entry. All right, and then the next, we do the same thing for what? We do the same thing for cash. All right, and how do we do? I mean, for the debit side, after we credit it, we have to come and debit it to show that money has entered into the bank. Is that fine? So money left our cash box and entered into our bank account. So you have to debit bank 700 naira. Now the question is, where is the money coming from? It's coming from our cash till. So you put cash in the description or the particulars. Then don't forget your classical C. Is that fine? All right. So we did that and so on and so on and so on. We said receive check from Tay, 10% discount, paid standby check, 900 naira, less 9% discount, receive check from Sean, and all of that and all of that. Now let me illustrate discount using these last three examples. All right. We stopped at May 22, but here is May 24. So let's continue from May 24. Now May 24 said that you sold goods for cash. That one is normal, right? Sold goods for cash. So we come here, we say this person sold goods, that's sales, for cash. So the amount is coming under cash. How much is that? 3,000 naira. I'm sorry, this amount is supposed to be under cash. Sorry, sold goods for check new. My apologies for that. It was in the right place. Is that fine? So that's for sales. Now we have two last transactions that I'm going to use. We have the last two transactions that I'm going to use currently to what? To explain how discount is being treated in the three column cash book, both discount allowed and what? And discount received. Afterwards, we are going to balance up the account and move on to petty cash book. Is that fine? All right. Kumi, I hope you are following. Please, if you have any question along the line, kindly do well to drop it. I'll be willing to attend to it. So now the next one is what? May 30, we received check from Tanya, 2,500 and less 2% cash discount. Don't forget, since we are receiving, it's going to the debit side. All right, so we say May 30, we received it from Tanya. All right. Now, the way this works is that the actual amount is 2,500. All right. Let me write it somewhere here. So this account is owned by Adiza. The account is owned by Adiza. So, how much? 25 less 2% cash discount, abi? All right. Now, where is that 2% cash discount? Where is it coming from? Abi, how do we treat it rather? It means that if we receive check from Tanya 2,500 and we give the person 2% cash discount, it means that instead of actually receiving 25, we would receive 25 less 2% cash discount. Now, when you have a question like this, the first thing that you want to calculate is what is the cash discount. That will be 2%, 2 over 100 multiplied by 2,5. Is that fine? How much does that give you? It gives you 50 naira. So you come here, under discount allowed, that's where you first go. You write you write 50. All right. Now I'm supposed to collect 2,500, but I gave my customer a 2% discount saying he should keep 50 naira, which means that the amount that I'm collecting now is what? 2,450. All right. So the amount that we actually received from Sonia was 2,450 and not essentially 2,500, not effectively 2,500. Is that fine? Now let's move on to the next one. It's also about uh, discount. But this one is cash, this one is discount received instead of discount allowed. All right. So you paid check to Zoya 2,600 naira less 15% cash discount. All right. The first thing that don't forget, the first thing that you have to do is that we know that since it's paying check on May 31st, the money has to go to credit side. So we come here, we say May 31. You paid to Zoya. Now, what we are saying is that even though we paid Zoya 2,600, that 2,600 was less 15% cash discount. So, what's the first thing? Let us calculate the discount. That's 15 over 100 multiplied by 2,600. And that amount gives us 390 naira. Is that fine? So, you first come under discount received and you put it there 3,390. Then, what will be the new amount? Since you paid 26 less 390, that's what 2,210. Let's confirm they paid in check. So the 2,210 is going to the bank account. So 2,210. Is that fine? No, you don't look at these things like that. They are not that complex. So now let's balance up our account. No response yet. All right. So now we have the. So let's do the closing balance. All right. Now to do that, don't forget you are going to have something called balance carry down. So what we are trying to do is to check what part of the double entry, what side is greater than the other side. All right, we want to check if it's going to be debit balance, if the debit side is greater than the credit side, or whether the credit side is greater than the debit side. Is that fine? All right, so we have something called balance carry down. That's the closing balance on the transaction. That's what is used to describe the closing balance. All right. So now let me write out totals. Now the first thing is add up discount allowed. You say 200 plus 90 plus 50, that gives you 340. All right. So you say 340. So you have 340. Now discount received, you do the same thing. You have 81 plus 45 plus 390. That gives you 516. So come here. You have 516. All right, is that clear? So that's for discount allowed and discount received. Now please pay attention, we don't balance them. All right, so there is nothing under balance carried down for these ones. So you don't say 516 minus 340 and then you put the balance there. We don't do such for discount received and discount allowed. They are entirely different. They are entirely different. All right. So now we can now get the total of cash here and the total of bank here. All right. So 15 plus 900 plus 1000. What does that give us? It gives us 3200. That's 4300 rather. Sorry, my bad. So we come here, we say 4300. 4,300. Now we have to get what's the total under bank here. We say 4,200 plus 700 plus 1800 plus 1410 plus 3000 plus 2450. That's 13,560. So you come here, you say 13,560, and then you have to repeat the same thing here because you are trying to balance the account. Then you add up everything under cash. In the credit, on the credit side, you have 500 plus 700 plus 500 plus 600. That's how much? 2,300. Now, it basically means that we received a total of 4,300, but we just spent 2,300. It means that in terms of cash, we will have how much remaining? 2,000 naira. Is that taken? So we say 2,000 naira. Now for this one too, we have under bank column, we have 600 plus 819 plus 1455 plus 1900 plus 500 plus 450 plus 2210. That's 7934. Now this is also lower than the balance from the cash, from the bank column, from the debit side. Now please pay attention. Okay, pay attention to this. The credit side of your cash book, of this cash column, this place can never be greater than this place. At some point your credit bank column can be greater than your bank column, and that's where what? That's where bank overdraft comes in. Is that fine? That's where bank overdraft comes in. Now, what's the we have 7,934, then we say 13,560 minus that. How much do we have left in our bank? That's 5,626. So 5,626. So that's your three column cash book. Any question? Any question? Any question? No question? Any question? No question? All right, let's continue. So with that, we are moving into another topic, and this topic is actually simple and short. So this topic is called what? Petty cash book. Petty cash book. And let me tell you this, and I think I told you the other time too. Now, whenever you hear anything about petty, whenever you hear the word petty, know that we're actually talking about what? Little things. And that's why somebody can tell you that you are petty. They are not trying to say that you are little. They are just saying that you make a fuss over little things. You you get annoyed, you get angry over just little things, alright? So that's what it means to be petty. So petty cash book is a book of original entry which is used for what? For recording small expenses, e.g. postage, stationery. Now this is the way it works. For a very large organization or for a normal organization, let's say an average organization, there are certain expenses that are very insignificant and would not make sense if you are buying them and if you are putting them in the cash book. For example, let's assume that you buy pen every day. You are not writing stationery pen on inside the cash book every time. Your cash book will just be too long and it will be useless. Is that taken? So that's where the petty cash book comes in. It's a book of original entry which is used for recording small expenses. For example, postage, stationery. It can even be transportation, like maybe normal transportation. Somebody took a bus, a bike from somewhere to somewhere, and all of that. All right. Any transaction, any expense that is actually small, all right, based on their definition of small, should be what? Should be treated in the petty cash book. Is that fine? Now, the source document are invoices, receipts, and vouchers. Don't forget the petty cash voucher that I mentioned the other time. It's an authorization for payment. Alright, now the system for recording petty cash transaction is called what? The imprest systems. Alright, while the person in charge of the petty cashier is called what? The petty cash, the petty cashier. Is that taken? Now I'm telling you questions that they can ask you. This imprest. They can ask you about the petty cashier, then they can ask you about the last one, which is what? A specified amount of money that is known as what? Known as float. That float is whatever amount you give to what? To the uh, sorry. Alright, we are back. So that's generally what a petty cash book is. So please pay attention to the word impress system. They can ask you, this is the system for recording petty cash transaction. And what happens in that system is that you have a petty cashier which is separate from the normal accountant. Now this petty cashier is given an amount called a float, right? So it's like, look at it like pocket money that your dad gives you so that you what? You'll be spending it small small. That's the way it works. Is you have a cashier. Now instead of you to tell him to go and be meeting, they should go and be collecting cash every single time. You just give the person like 50,000 or 10,000 to meet little little expenses in the company. Is that fine? So that amount that is given to the what is it called? The amount that is given to the petty cashier is known as the float. Now once the petty cashier spends part of this money actually will what? Will be increased to the old amount. So it means that the petty cash, the float is what? Is a fixed amount. Alright, which means that if you are giving 20,000, if you are giving 20,000 for float, if at the end of the month you have spent 17,000, they will not give you 20,000 for the next of the month again. They will give you 17,000 to make it 20,000. If you have spent 18,000, they will not give you the whole 20,000. They will give you 18,000 because you already have what? 2,000. Is that fine? By the time you add everything together, you have your what? 180,000. Just like this one too. Is that fine? So that the amount of float is always what? Is always maintained not to go below and above, not to go above a particular amount, a particular budget. Alright. Importance of imprest system, it eliminates fraudulent activities because people can just be buying say those little little items. There is a technique for fraud called salami technique, alright, where people skim off the top little by taking little amounts that no one will notice until a particular day when you just notice that you have lost a lot of money, and they did not take the money at once, they took it bit by bit by bit. Is that fine? So it eliminates fraudulent activities. Another one is it ensures accountability for every expenditure since all is supported by documentary evidence. So your petty cashier or your petty cash book, your that impress system, it ensures accountability for every expenditure. Because in your petty cash book, you are going to have details of all of those little expenditures, and then you must have documentary evidence to back up whatever you say you spent. All right, so that's another way through it. It eliminates fraudulent activities, and it also ensures accountability. All right, for every expenditure. Now let's look at the layout of a petty cash book. A petty cash book is not something that we will solve a question on. All right, it's not something that you can actually solve a question on because it's very long, and nobody will ask you to do that in your question. After in your exam, I've told you things that they can ask you: the imprest, the float, how it works. All right, they can ask you that what kind of expenses is petty cash book used to what? To treat, and you know that that is what it is used for, recording was small expenses, so and so on. So those are the main questions that they will ask you. Nobody will ask you to prepare a petty cash book in your JAMB exam. Of course, it's not theory. All right. So now this is the layout. We have receipt. Now in this receipt is where you first put your folio and your float. Let's say our float is 10,000 naira. At the beginning of the period, now you have your date, you have your details. So let's assume that date, this was 1/1/2026, and date is, let's say, float or from cash. Say cash float. Total 10,000 naira. Is that fine? So on the next day, you have 2/1/2026. So let's assume that you now bought something, you posted the letter. So that will be postage. So you come here, you say, so maybe on that particular day, so you posted the letter, so you say postage. You now write here, let's say it costs 200 naira. You write it here, you come here and say 200 naira. All right. So you can have a lot of other things here. All of that. So what happens is that all those little expenses are categorized into a number of expenses. So you can put them under postage, cleaning, transport, what's that other one? Stationery. All right. So you can put them, you can group, they are grouped together that way. All right. And once a particular payment is made like that, it is brought to the column that it belongs, whether postage, cleaning, transport, what did I call it now? Stationery, yes, or whether stationery. So that's basically how a petty cash book works. So you see this, but we will not draw it. We will not draw it because we don't need it actually. So we see look a petty cash book with for analysis. Prepare a petty cash book with four analysis columns. Postage, we have one postage and stationery, number one. Traveling, let me target. We have number one. We have number one. Traveling, number two. Carriage, number three. Office expenses, number four. Is that taken? Now the book is kept on the interest, on the imprest, sorry, pardon me, imprest system, and the amount is 1,000. This amount is called the float. So they can give you something like this and then they will ask you what is the cash float. You know that in this case it's what? 1,000 naira. So now this is the way it works. Maybe I should use this example to just tell you how it works very briefly. All right. So now we said January 4, petty cash in hand. So we'll come here, we'll come to the date. We'll say January 4, petty cash in hand. That's balance brought forward. Abi, how much? 150. So sorry, put it here. So it does not come under total. It's total of expenses that comes under total. My bad. I apologize for that. So you come here, you say 150. But don't forget, the float amount is actually what? 1,000 naira. All right. They now told you that they received cash to make up the what? The interest. Is that taken? They received cash to make up the interest. What that means is that I told you that since the float is 1,000 and amount that you must have must not never be above 1,000 naira. So if you have petty cash in hand of 150, means that out of the 1,000 naira that they gave you before, you remained 150. They will not give you 1,000 naira again. Is that taking? What they will give you is 1,000 naira minus 150, an amount to make up that particular amount. So on that same day, on January 4, you have cash float. Instead of 1,000, it will now be what? 850. That 850 makes up what? It makes up your receipt to be what? 1,000 naira. Is that fine? And so on. For example, January 6. So let's say the next date, January 6, you paid railway. Now you now be looking at it. Railway will fall under traveling. You paid railway first. Okay, January 5, they bought stamps. Stamps will fall under postage and stationery. January 6, they paid railway first, 19 naira. Bus fare. So railway first is under traveling, bus fare is under traveling, telegrams is under postage and stationery, bought shorthand notes for office, that's office expenses. So you have to put everything like that. So for this one, you have 19 and 10 naira, all right, that will go under traveling. You have telegrams that will go under postage and stationery. Then you have shorthand notes for office that will go under office expenses, and so on and so forth. So this is what they can ask you. Instead of giving them 1,000 naira again, they will not give the petty cashier 1,000 naira. What you would receive is an amount to make your balance up to what? To the amount of the float, because the amount that you must have must not be greater than the float at every point in time. Is that taking? Yeah, so literally that's that on the petty cash book. All right. So I have some quiz that we'll talk about now, though I've given you most of the questions that they can ask, all right, including on that petty cash book too. But I'll just have little quiz. It's simple, just to jog your brain. Kumi, please, can you confirm that you are still with me? You'll be the one to answer my quizzes today. Kumi, are you there? Or you are running away? You don't want to answer my question. You are there, all right. So let's start from question 1. You can see it on your screen. All right, thank you. A cash book is used for recording A, all transactions of the business, B, only credit transactions, C, only cash transactions, D, both cash and credit transactions. I need your answer. So before I even call it out, you can read out the question you can see the question on the screen. Just drop your answer to save our time. C, yes, only cash transactions. Thank you. Let me mark the answer. Let me use red. So the answer is C. Then question 2. The cash book serves as both what and what? A, journal and ledger. B, ledger and trial balance. C, journal and trial balance. D, cash account and bank account. This one can be a little bit tricky. Two, A, yes, thank you. Journal and ledger. Journal and ledger. And why is that? It is because another name for subsidiary book is what? Is journal. It's called subsidiary book, book of prime entry, book of original entry, day book, or journal. So that's correct. Journal and ledger. Question 3. Which of the following is not a type of cash book? This is a very, I don't want to say any question, but which kind of question is this? A, single column cash book. B, double column cash book. C, triple column cash book. D, sales day book. The answer is sales day book. Very obvious answer. Nobody will ask you this question. Sorry. Question 4. In a double column cash book, the two columns on the debit side represent. In a double column cash book, the two columns on the debit side represent what? A, cash and discount. B, bank and discount. C, cash and bank. the discount on sales. What's your answer to that? Number four, C. Yes, cash and bank. Right, it's a double column cash book. Number five, the contra entry in a cash book is made when dash. A, cash is withdrawn from the bank for office use. B, cash is deposited into the bank. C, a check is received from a customer. And D, a check is issued to a supplier. A, cash is withdrawn from the bank for office use. B, cash is deposited into the bank. C, a check is received from a customer. D, a check is issued to a supplier. Waiting for your answer. Kumi, are you still with me? Let's do this on time so that I will just take your question. So any question that you have, any question that you have, you are right. There are two answers. Thought you will not notice that. So the answer is A and B. Well done. So when cash is withdrawn from the bank for office use or when cash is deposited into the bank. Now don't forget, if they say cash is withdrawn from the bank for family use or personal use, know that that's not a contra entry. It is what? It is drawings. Alright. But when cash is withdrawn from the bank for office use, that's a contra entry. When cash is also deposited into the bank, is also contra entry. Well done. Now, question 6. A petty cash book is used for recording A, large cash payment. B, small cash payment. C, all cash receipts. D, all bank transactions. This one no go far at all. The answer is 6. B, abi? Alright. That's correct. Small cash payment. Question 7. The impress system of petty cash involves dash. A, maintaining a fixed amount of cash for petty expenses. B, reimbursing the petty cashier for the exact amount spent. C, recording petty expenses in a separate ledger. D, both A and B. This might be a little bit tricky. Maintaining a fixed amount of cash for petty expenses. B, reimbursing the petty cashier for the exact amount spent. C, recording petty expenses in a separate ledger. D, both A and B. What's the answer? Question 7. Are you still with me? Question 7. Sorry about that. All right. So we said, of course, the answer is correct. I mean, the two answers are correct because, of course, your impress system is about maintaining a fixed amount of cash for petty expenses, and that fixed amount is called the cash float. All right. But in order to ensure that this amount does not surpass this, it means that the petty cashier would only be reimbursed for the exact amount that he spent. So if cash float is 1,000, just like what we did, cash float was 1,000, he spent the money and it remained 150. So he has to be reimbursed 850 that he spent. Is that fine? So both answers are correct. So the answer is A, D, both A and B. Is that fine? So now let's move on to the last. Ah, we are not there yet. Question 8. Which of the following is not a common petty cash expense? Yeah. Which of the following is not a common petty cash expense? A. Postage, B. Stationery, C. Rent, and D. Transport. Which of the following is not a common petty cash expense? A. Postage, B. Stationery, C. Rent, and D. Transport. Let's do this on time. Kumi, waiting for you. C. Yeah, that's correct. Rent. Postage, stationery, transport, they are common for petty cash expenses. But your rent is not a petty cash. Can you think of the amount people pay as rent in Lagos or in other places? So rent is not a petty cash. Cannot be paying 3 million a year for rent and call it petty cash expense. Question 9. The petty cash book is usually maintained by A. Accountant, B. Cashier, C. Sales manager, and D. Purchase manager. A. Accountant, B. Cashier, C. Sales manager, and D. Purchase manager. Who maintains the petty cash book? Who maintains the petty cash book? Is it A? Is it B? Is it C? Is it D? Ready to take your answer, Kumi. Ready when you are. B. Cashier. That's amazing. All right. The petty cashier. Now, the last question. At the end of the period, the petty cashier is reimbursed for A. Total amount of interest, B. Amount spent, C. Amount remaining, D. Both A and B. Can be tricky. Can be a tricky one. Total amount of interest, B. Amount spent, C. Amount remaining, D. Both A and B. Why do you think the answer is D? Tell me. You said both A and B. The petty cashier is reimbursed for, is it the total amount of interest or the amount spent? Go back to this question now. You reimburse the petty cashier for the exact amount spent. So the answer cannot be both A and B. You don't reimburse the amount for the total amount of interest. That means for our question there, the petty cashier will be collecting 1,000, 10,000 naira. But that's not the case. You reimburse him for the amount spent. So the answer is B. Do you understand that? So please, the answer is B. Take note of that. Let me know if you understand. Then, if you have any question at all, you can ask me. We are almost done. We're coming to the end of the class. If you have any question, kindly ask me. All right, any question as we round up? You don't have any questions? No questions, no questions. Just write out. No questions. All right. So thank you so much. Uh, we have come to the end of this class. Thank you so much for listening, and I wish you continued success even as you prepare for your examinations. All right. Now let me say this. Our Padlets will be made available from next week so that we can drop questions for each other, ask questions from each other, and then just learn. All right, just so that you get your desired score. I don't know what your desired score is, right? But may I desire this score on the screen for you, 320 plus. I desire it for you. All right. So let's work together. We are doing the work here. Please kindly do the work on your end too. I pray God helps us all in Jesus' name. All right. Pray God helps us all. All right. So this is this and that is that. So that is that about that. Thank you so much for listening. Do well to have a great day. You're welcome. Come in. Please, in case you know any other of your colleagues that are writing this course, please tell them to come for classes. So that at least we can interact. There can be that interactive atmosphere so that they will not just get to watch the video alone, but they will be able to ask questions and we will be able to make it engaging for each other. Look at the way we made it interactive between the two of us. If we were more than this, we'll be able to still do this better. So please tell your people they should come for class. Don't miss classes. Is that fine? Thank you. So do well to have a great day. Bye, 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 bye. You're welcome, welcome, you're welcome, you're welcome. Good night.